Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just got a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. Really big shout out to all of you joining the live stream today. So many of you recently have been getting wonderful messages. Loads of people doing some really incredible things out there in the space. And it's been really good to engage with a lot of you. Considering how tricky the current conditions are to navigate, we've got a lot to cover today. Obviously, we're going to take a quick look at the news as well. We're going to start with Bitcoin like we always do. We're going to take a look at Ethereum. I want to cover the NASDAQ today, take a look at the VIX, see what Solana's up to as well. It's been such a major player in this cycle that we want to take a look. And I wanted to respond to a few questions that I've got recently. So for those of you who are regular watchers of the stream, you'll know that, by trade, I am a technical analyst. But what a lot of people don't know about my background is that I used to build and sell companies for a living years ago before I got into finance or into trading anyway. And one of my key backgrounds was in property development. Now, I got asked a few really interesting questions last week. We did a live show and there were a couple of podcasts, and somebody was asking me, in the current conditions with everything that's going on, what is my number one high conviction play from point of view as an investor? And one thing that I always really stress to people is how different investing and trading is. Technical analysis is a tool for entering trades, for finding good trade entries, for finding key areas to buy, to sell, to watch human psychology play out on a chart, all right? So when it comes to investing, there's a lot of different things that we consider, right? Now, for me personally, I wasn't somebody that grew up in the world of technology. I didn't have a mobile phone when I was younger. We didn't grow up with computers at schools like the new generation does. So my understanding of technology is probably a little bit muted to a lot of people who are really committed to that space, and others who have been born into it and really kind of taken the bull by the horns. So with anything, what I like to do is I like to find an area that I can add quality or that I can add value. All right. So for me, I've been saying this for a long time now. I think probably the biggest space out there ready for disruption is property, right? Especially from an investment perspective. So going to cover an amazing company and project called EstateX, who have recently launched their token ESX. And we're going to cover that. We're going to look at the technicals about it. I'm just going to give you a very quick rundown because I'm always incredibly honest with you guys about who I'm invested in, who I'm not invested in, the reasons that I'm there. And this is my number one high conviction play. So I really wanted to start the day off. There's so much uncertainty in the market at the moment. Everywhere you turn on, people are either really doom and gloom, saying that, all the tariffs washing through all the other bits and pieces are going to kind of completely kill the bull market. All the while, all of this news that's come out, the tariffs, everything that's going on with China, the very sad situations that are developing geopolitically, all the time, Bitcoin's kind of just been holding, grinding away, the same as risk assets, right? We've seen the S&P 500 set a new all-time high. We've seen the NASDAQ set a new all-time high. And we're really seeing the continuation of strength in risk assets. So that's what we're going to take a look at today. But like I said, I really want to kind of take a look and share that with you. I think it's a good way to start the week with some positivity. This is a project that I'm just buying up, and I'm buying up as much as I can at key levels because I have unbelievable hopes for this in the medium to long term. All right. So we're going to take a look at that as well, because I know some of you that come onto the show are often asking me about my investments because, you know, maybe you're not technical analysts, or maybe you don't have, you know, the time or the inclination necessarily to get onto technical charts. But that aside, let's start with Bitcoin. Then we're going to take a look at the news. Then we're going to rip through our alts, and we're going to finish up the show with this amazing company. All right. So without further ado, if you do have any tokens today, and we do have some time, I will take a look as well. Please just pop it in the chat. I hate it here. Hello, mate. Good to see you. So what have we got here? Well, quite simply, I wrote this in the Bitcoin report last night, which goes out to members at the Bird Nest. We can see what happened here with this beautiful slope trend line. Why are these really important? They're not just magic lines that, you know, as soon as price closes above it, you can absolutely say it's going to moon. It's just really key. Look, resistance, resistance, resistance. So basically, sellers are just stepping in along this line. If we trace that down, ideally what you want to be seeing, like with this, is an increase in volume when you have a breakout. All right. See how we had the volume increases here? Yeah, looking at the green candles here, how this stepped up. But then overlay the volume with the candle. Look what a bearish candle it is. Long tail wick to the upside, showing absorption. All right. And then we get this bearish pin bar with a kind of medium nose on it. Price then closes a bearish engulfing candle. So what do we do with our rules? When we get a rejection here, when we get the confirmation candle, we're then looking to trade that to the next available liquidity. All right. A little bit similar to what we saw up here. We kept seeing these wick rejections. So when we got this one up here, we're saying, okay, price has made numerous attempts here now. Price is probably going to seek value a little bit lower. We targeted the low within the gap. And then we said that basically our analysis from the prior week, so the week before last, was that if we got enough absorption here and held this gap, ideally closing the body outside of it, then we would target back to the prior all-time high. All right. Okay, not obviously the recent all-time high here, but the prior one, which was back in January. Okay, because that level has been capping the market to the upside. You told me you were all in Pepe, BC. Yeah, exactly. Maybe that was the risk portfolio that's kind of swimming somewhere in the depths of abyss at the moment. But you never know. Pepe might come back. We had a crazy cycle this cycle, watching the memes all pop off, right? It's definitely been keeping people guessing, even the very best on-chain and fundamental guys, of which I'm very fortunate to work with a few of them, in my opinion, anyway. You know, it's been much more difficult this cycle to pick out those narratives and those winners. So what we got here was a nice high volume breaker. You see how it kind of sitting down here, and then you saw a nice expansion candle here. High volume, what does it do? It matches a really large body impulse candle, right? This one here, this thrust candle that takes us out of here. And then the other thing as well, right, to watch is, look, we get an initial rejection here, right? This kind of doji candle, kind of like a thin body pin bar almost, right? So on that rejection, see how we kind of maintain decent volume here, right? So you're not seeing a big drop in volume here, and you know, you're certainly not seeing any bearish volume come in. So just to give you a little overview of what we're looking for, we're watching for these reactions at key levels: support and resistance, gaps, highs and lows, all right, and sometimes as well our order blocks. So where does that leave us? Well, we've actually set a really nice bullish engulfing candle here, right? So if we take our adjoined bearish candles here, so why is this important? Let's just mark this up as our order block weekly. You don't see many of these on the chart. Normally I mark them up, and I'm just very aware that that's the kind of area that we're in, because executing on the lower time frames, you can spend a lot of time down in this area. You don't want some big block kind of like obscuring the screen, or a giant black line across it. It can just be a little bit obtrusive. So for me, what I'm looking for here to designate an area of supply and demand, in this case demand, is price purging out, taking liquidity, or reacting at a point of interest like a gap, or in this case support as well. Then I want to see that reaction. And if price sets this order block or this area of demand afterwards, it needs to close above the bodies for me. Bodies are where the true trading is being done. The wicks are telling you where price attempted to get to. All right. So when we see this large expansion here, and we notice we've got, you know, a green candle here. Probably would have liked to see that a little bit bigger here because we did have rising bearish volume. All right, but probably not too much to read into there. At least we've got that nice expansion. So any retests of this area here are going to provide us some potential long entries on the lower time frame. All right, and that's really all I'm looking at here. Price is clearly still just consolidating, you know, realistically setting a bit of a bull flag here, right? I mean, if we were to take this and just do it in a different color so that we can see this, right? Something like this. I'm just trying to kind of link these. I always want to be respectful of everything that's on the chart, right? So I learned a lot of this in my very early years from a guy called Tone Vase, who one of the nicest guys in the industry, in my opinion, used to run the Bloomberg desk, super knowledgeable trader. But he was always saying to me when I first kind of started out that you always want to anchor these to either the bodies or the wicks, and then it doesn't matter if you select that you just allow these to go from wick to wick, or if that was back then, that would be here. Yeah, we can see actually a little breakout of this area now if that was the case. The key is to be consistent. What I like to do is I like to find the line of best fit, and if I've got all these candles on here now, I'm saying, okay, well, resistance, resistance, resistance. You know, here we can see that it's kind of got 1, 2, 3, 4 touch points here. Is this the close above and what we want to see in terms of the breakout? I'd want to see slightly higher volume than that. But either way, however you're doing this, whether you're using it just on the wicks, whether you're using it as a line of best fit, was always taught that you don't want to abuse the bodies of the candles, right? If this is all the information we have on the chart here, then I'm either saying, okay, well, this is either a rejection here, or if I'm allowing for the bodies, I have to do that. Otherwise, you can just basically put the lines anywhere, right? So whether you use wicks, whether you anchor to wicks and then respect the bodies of the candles, just make sure you're consistent in the way that you do it. Looking for breakouts of these areas here, again, what I'd be looking for is like a high volume candle. Yeah. So it's looking positive on the weekly scale. So what we're going to do is move pretty quickly down to the daily now and just decant what we're looking for on there. Excuse me, just a quick sip of tea while it's still warm. So what have we got here? Let's pop on our daily. Now, you see this. We know this is the weekly order block area. We can see price driving down into this. We want to see if we've got confluence around this area. We can see this was the daily drive down here. Yeah. So price rising here. See the large rising volume spikes here, abnormally high compared to the others. Yeah. Now, what I'm looking for when you see those and prices coming into a key area of support is the reaction that you see off the back of it. Because, you know, these large or slightly abnormally large spikes can often be price getting rammed into a level to engage liquidity at that level, all right? Induce late sellers, take out the stops below this level, dive into this giant liquidity pool here that allows major players to step in and fill their bags without much slippage. And then we see these reversals, right? And basically you're putting late shorts into a squeeze here, all right? And you're generating that liquidity. If we draw that line across, we can see price dipped into this area, recovered it really well. Remember our rules, or my rules anyway, right? Whenever we're engaged with a gap, a low, a high, or support and resistance, what are we looking for? Prime example up here, just to show you. We set this gap, what happened? Price drove down here. We saw that long wick. So the assumption is that price is probably moving up to the inefficiency to rebalance this gap before heading lower. Now, if I'm wrong, I want to see price close above this gap, inverting it, right? And then I say to myself, okay, we're going higher. And if you want an example of that, this is a really good one here when we had this bullish gap. Yeah. Price, we were looking for price to get support in here, and look what happened. It was purged right through it. In which case you then see this area become purple, which means it's an inversion gap. And that's currently what price is still arguing with here. So before we had all this price action develop, when we saw this long tail wick, we're saying, okay, bearish gap, resistance. Yeah. Inversion gap, resistance. So we're either looking to trade off the back of this close when we see the long upside wick, or after the confirmation candle, which is the bearing engulfing candle, we're then fairly certain price is going to start reaching for liquidity below these lows and ultimately get drawn down towards this gap. So looking at this here now, what can it tell us? Well, we got this kind of internal high here. Price has closed above that. It's not the biggest close in the world, right? And obviously what we need to consider is the fact that, you know, this is, you know, weekend trading. A lot of people disagree with me on this, but I do like to see traditional markets trading just because, you know, in terms of the volume, the volatility that's brought in. I like this wick up here, right? Because look at it, it's an abnormally long wick. So when price drove up here, sellers were very, very aggressive. Buyers took control all the way up here, then sellers absolutely smashed them back down, ultimately then melting away. And the sellers took over, all right? So the bears are in control of this. And that's what we want to try and understand when we're looking at these candles. Who's in control of it? Are the bears or the bulls in control? If the bulls are in control, they're driving price to higher prices because that's where it's seen as value. So people are saying, you know what? I've gobbled up Bitcoin here around 100K. Yeah, it was that good key psychological level. A lot of people were talking as we were coming into resistance here of it dipping down to them, and I completely agree. Also allowed us to retest a key area and drive into this weekly gap, clearing out the liquidity left on that prior run. So with all those factors considered, people are saying, okay, well, Bitcoin's value, I want Bitcoin as part of my portfolio at 100K. I think this is going higher. So price then seeks, a higher fair value price. That's just simple auction market theory, market auction theory, but also, simple supply and demand. There's X amount of an asset down here. If people are buying it up happily, then the price of that asset rises. Okay, and people are buying it at higher prices. The key thing really here is to look at your time horizon as either an investor and a trader. So how long you're willing to be exposed to this asset for. While the S&P 500 is running hot, while the Nasdaq's running hot, they're traditional market baskets, so indexes that contain major technology stocks, including things like the Magnificent Seven, your Microsoft, Nvidia, Apple, etc. While there's money out there and the capital flows are good and the market's showing an appetite for risk and major news events are doing very, very little to dent the overall progress of risk assets like that, the chances are that the landscape is quite good for Bitcoin as well. That's our kind of theory behind it. So as we've driven up into here, price is consolidating now. The daily doesn't really give me too much to go on, and I'll tell you as for why. Now, whenever we see price engage a high or a low, I know I keep saying this, right? The same in terms of like support, resistance, gaps. What we want to see, as we had with this, so see we had that wick high here. Look how price had a high volume close above this. Yeah, so look, price comes here, volume candle. This one is a higher volume candle that closes above. Then look what happens. Price retests this area perfectly, right? Because if there were sellers there before, they're offside. If they've held through drawdown here and allowed it to come back, gives them a chance to mitigate, get out of their positions, but it also triggers the stop losses of people that were short here if they're left there, meaning that this can be a key area of reversal. So if the buying is really strong above an area, where shorts are very, very able to step in here and get a good fill, then it's showing strength to me. Okay, so as long as we hold this area. Now really I want to kind of see the same with this, except I'm a little bit more focused on this higher, right? Just because, again, abnormal wick high here, there was clearly really strong selling pressure. How many people realistically started to short the market here? Probably some, but I don't find that that's a significant high. But what I do like is that we had, a strong volume close here. It's a rising volume from Saturday's trading, which really kind of pumped price up. But it wasn't the most convincing close. Now it's kind of sliding itself down beneath. So in truth, there's a couple of things here. There's this order block here or this area of demand, but we don't really know. It's not the largest. We haven't swept liquidity, so it's not what we would call high probability. If price is going to have a move lower, though, the key thing that stands out on the chart for me here is this gap, right? So when price moves aggressively, you see these inefficiencies, these gaps, a failure of order pairing, buyers stepped in very aggressively here. The market loves to rebalance these areas. That's why we keep them, and we identify them on the higher time frames to see where price is potentially drawing to, so we can look on the lower time frames as well as its current time frame to see what the reaction is. So if price continues to break down, what have we got on the chart? We know this whole area is a weekly order block that could be looking to be retested, and we know that we've got a daily gap here. What I would love to see in an ideal world is price make a fairly aggressive move down to here before a very sharp V-shaped recovery, right? That would then tell me that buyers are really, really stepping in at this level, right? You'll notice that, I know I say it pretty much every stream, and all my old students and in my mentoring students will laugh at this one, but it's the idea of the hot water test is what I call it. And you basically got two pans of water in front of you, right? One is boiling hot and one is tepid, and you're blindfolded. Now, as soon as you put your hand in the tepid water, what you'll find is that price comes up, it kind of stays around for a little while. There's nothing really kind of going, oh my God, right? Look what happens. Price kind of comes into this level here, kind of chops around sideways for a little bit, ultimately continues lower. Look at the difference in this move lower. Now, the difference is, yes, we've taken some form of liquidity here and also from here, but look how the recovery is fast, right? Quick down, quick up. All right, that classic V-shaped recovery. So what we want to see, very similar to what we saw here, long downside wicks, price dips in. Oh my God, that's the pail of hot water. I'm pulling my hand out immediately and I'm moving my hand to safety, right? If, however, you're more than capable of keeping your hand in that water because it's tepid, often you'll see price can kind of go in and get kind of stuck and then ultimately can break down from there. So that's, again, something that we're looking for. So ideal world scenario would be this: price breaks down, comes into this area. I think you start to induce a lot of sellers. A lot of the doomsayers that are kind of like, there's all these geopolitical issues, etc. Markets are incredibly good, much smarter than we will ever be collectively at pricing this stuff in. So I wouldn't really give that too much thought. I'd focus a lot more on understanding the news, decanting it in a way that you can make it useful. Because if you're just kind of looking at all these fear-mongering headlines all the time, often they're either being used to gauge the market from some publications. They're even being put out there as a test of the water. But apart from that, ultimately, we're not going to sit here and argue with multi-billion dollars and pounds worth of resources and systems and algorithms, etc., that are at the top of their game. What we're trying to do is monitor what they're doing and grab a piece of that action and step on board when those entities are buying, all right, because it gives us a much better opportunity of getting involved in a long-term trend. Jojo, how are you doing, my friend? Wonderful to see you. Jojo, a brilliant traditional market trader as well, and a good dabbler with crypto too. So we've got that on here now, right? So we can see that. What if we hold this area? Well, look, it would be remiss of me not to add this here because we do have this daily order block. Now, technically, an order block or area of demand, right? So technically, when I'm looking at these, I like to focus on the high probability ones, right? Ones that have taken liquidity, right? So with this one, I'm saying, okay, if price is really strong and we see a very, very established trend, then I will look for these areas of demand or these order blocks, right, for price to draw into, and they will typically protect the trend higher, for example, right? See, we have the breakout of this area here. Okay, so what happens? We close above the order block here. Let me just get rid of that now. I'll leave it actually. We have the order block here. Price closes above. We establish a nice uptrend here. All right. So now, after these big impulse moves high, you see we get this small collection of candles here, not just a singular one. I'm looking at that and saying, okay, what happens? Price closes above. Yeah. Notice we get a nice volume spike here as well. So we're showing the buyers are interested here. You can use the volume switch. You can use volume. You can use things like the CBD. Then price expands higher, right? Comes back down to hold this area. Now, typically what I'm looking for from the body to the low of the wick here is for the 50% of this area to hold. Yeah, just to show that little bit more strength. So you can just take your Fibonacci, put it on the body here. Just get a 50 line on here, which is this one, the one in the middle. And what we can see here is the absorption going on when price draws in. So two big bearish candles. Yeah, 1, 2, bang, rising volume. Now, what's interesting here is that to see the rising sell volume is telling me that there's immediate pressure coming in from sellers, right? So the price is getting forced into this level. It's now how we react that I'm interested, yeah? Because remember, this is an area of support. We're holding the 50%. I want to see wicks below it. Then I want to see rising volume. Yeah, look, 1, 2, 3, and look at this. This was such a beautiful move. This is real bread and butter for breakout traders, in my opinion, right? It's when you see an indecision candle after expansion at a key level. So in this case, we're at support. We're looking for volume to step up. We're looking for large bodied, bullish candles and tail wicks. Look what happens. Volume steps up, volume steps up, volume steps up again. But look at the volume in this and then look at the candle. Massive bullish candle, decent volume. A little doji candle here, right? But larger volume. It's the compression before we then get that pop, all right? And then ultimately, what are we doing? Remember, we said we're following the order blocks up, right? So area of demand, price consolidates, we get the down close candles, price closes above here. Let me zoom in so you can actually see that as well. Price closes above here, we get the perfect retest, and then price really, really takes off. Yeah. So now we're doing, all I'm doing, is I'm looking through here for any changes in that, in that dynamic, and there aren't, right? What do we get? Here are the down close candles. Do we get, Are we getting any of these up close candles? The large body candle, that one's containing the range here. This one contains the range here. Does price close below that body? No, it doesn't. All right. So we're still staying with the trend. We're seeing this as consolidation. Yeah, beautiful slow trend line. All right. Look, large volume candle confirming the breakout. Price retests it and we're away. But we're looking at the order blocks here. Now, something I like to do is if I've got larger order blocks like this containing smaller ones, I typically focus on the larger order block, either singular or consecutive candles, because price action is kind of contained within this range. Now, what do we get? Breakout, decent volume, confirms the order block. Again, we're looking at this to push price higher, right? So on and so forth. Okay, same with this one. Price closes above, good volume, retest, price moves higher. Where does that dynamic change? Well, it changes here. Just do this in red so it looks a little bit different, right? Consecutive up close candles, yeah. Price breaks down with higher bearish volume, rising bearish volume, all right? So then we're saying, okay, this is now confirmed as an order block. This is the area. We don't even retest this, but the reason for that, or certainly in my opinion, how I would be looking at it, is we've got this bearish gap there as well, right? So actually price was really weak here. Didn't need to retest this area. Bearish gap allowed sellers to step in aggressively and price purged away. So let's clear this up for a moment and just very quickly, because we're going to run through the rest of the alts. And then, like I said, I really want to take a look at State X with you guys, which we're going to do shortly. And why is that relevant? Well, because we need to understand that we've got this order block here, right? It is very, very skinny body, and I do pay a little bit less attention, or give less gravity would be a better way to say about it. You should always have attention. Erica, hello, my friend. Great to see you. You should give attention to everything on the charts, right? So I don't mean that, but you know, the larger body candles for me have had more trading going on, but this one's quite a skinny candle here from Thursday. So let's see what we get. Either way, if we engage this area and on the lower time frame, we get our long triggers. Yeah. Look, what are we? I'm bullish here. Price is pushing up aggressively. We've got targets above us. If I get long entries from here, very clean, then I'm going to give it a go, right? If I'm wrong and price starts to break down, then I've got these areas here to target to get back on board. I would need to see price close below this daily gap here. Yeah. So that would be a daily candle close. Do it black so it matches my other candles. Below here, inverting this before I would then look for price to be taking out this low. All right. Until then, I'm holding bullish. All right. I'm going to take a very quick look at the 4 hour as well. Because this is what I wanted to cover with you guys, right? Because I think it's so very important to be accountable when you're sharing this information with people. Look, this isn't financial advice. You can go and do whatever the hell you want, right? You can invest in what you want. You can blow your money if you want, or you can sit down, you can learn, you can work hard, and you can look to master a niche within your industry. That's what I would recommend people do. But you don't follow what I do, right? Plus, it probably won't even help you, because you need to find the type of trader you are. You need to overlay that. But hopefully, like in my early days, I was watching a lot of people, and back then there really wasn't the information available that there is now with things like YouTube, right? You know, I was watching people like Tone Vase, I was watching people like Larry Williams, right? You had to watch these old videos and stuff like that, these people trading, and very little was given away. But by the by, I think it's very important to be accountable, right? Which is why I always share this stuff with you guys, and I try and keep all the same stuff on the chart, meaning that sometimes it does get a little bit messy. But I wanted to discuss this with you, right? So the conditions that I set out last night in the Bitcoin report, which, like I said and keep saying, shared with members. Yeah, look at that, by the way. Nice breakout retest. Yeah, I wonder if we got the volume. Yeah, stepped up the candle before. That's right, and then died away. Anyway, I digress. This is what I wanted to share with you, because what I'm trying to do on these shows now is what I do with the trading team, is what I do with the members at the Bird Nest as well, which is setting conditions for our trades. Meaning that it's not just a case of looking at the charts and kind of saying, okay, this is what happened, blah, 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 hindsight. We're looking for plays that we can move forward with. We did it last week. We took a trade live on the show on AVAX, hit target one, got stopped at entry. Yes, as our Polish friends say, right? The whole key thing is that we're accountable for those actions. Or I'm accountable for those actions, right? If you guys are going to spend your time listening to me, the least I can do is, be honest with you. So why is that relevant? If you guys can see this gap here, let me just do it in green for you. This was the condition, right? So quite simply saying, on Sunday's report, if price draws in, if we get a good reaction here, then this was the next high. So that was the target at the time. Now, obviously, we've hit that, right? So, this isn't a pat on the back. Yay, well done me. I actually wanted to say it for a very different reason, which was, if you notice, the gap, we closed just below it. The conditions that I set out was if we had a large body bearish candle close below this level, then I would then wait and then would look to be targeting this low if we showed weakness. Now, actually, what happened here is, and again, the one caveat I would say on this is weekend trading, obviously the lower volume volatility, things can be a little bit less clean. And these things don't work perfectly all the time, right? But look what happened. Price closed below, did this late yesterday evening. So we closed the candle out here. 9 o'clock candle started. We recovered it so quickly. So buyers stepped in so aggressively here. All right. But actually, what was really interesting here is looking at the falling sell volume. So sellers were getting a little bit weak here. Price really tried to get shunted down here. The gap, did it work perfectly? No. But ultimately, once we see this recovery candle, then all of a sudden I'm saying, okay, how does price react at this high? Remember the rules we've been talking about here as well. What do we see? Price raged up into this high on a really large high volume candle. And we saw the rejection. Remember, we come back underneath this high, meaning that we're then looking for price to depressurize here. It's had all that momentum trying to get above here, hasn't been able to do it. Large volume, rising candle. Look at this body here and look at the volume. More volume in this candle. Small body, larger rejection. Now, it's not a doji. If it was a doji, we could be looking here thinking, okay, maybe this is compression like we talked about before, and this thing is ready to pop, right? But actually, this isn't. This is an inverse hammer. It's a bearish pin bar with a short nose. It's a long upside wick showing absorption, and then the sellers really stepped in here, all right? And this was through Asia. But now, because this area has played such a key role here, this is really setting conditions for me still. But it's kind of been a little bit trampled here, and the liquidity isn't really being respected necessarily unless we come down and take out this low. Now, again, the caveat is this is Monday. We're coming out of the back end of a weekend. You know, the New York pre-market isn't open for another hour yet. So I really always take Monday as a day to see how traders, investors, etc., are setting out their stall for the week ahead. We look at Monday's range. We look to see where the buyers and sellers are, see how aggressively it's opening. And obviously, we want to see the news wash through as well, which we're going to take a look at in a moment. Burnside, my friend, how are you doing? Good to see you. Grandmaster Pikachu. Yeah, sure. Deep, please. Yeah, deep. Is it just USDT? Is it? Do you know, mate? We'll have a look at that. Okay, so without further ado, whilst we hold this, then the way that I see it is we had the compression here, we've had the breakout, price is being tried to be forced down here and is just holding this area, right? Ideal world, we come and take out this low and then we recover. The other thing that I want to take a look at here as well is our B-Pro, our Burbicator Pro, it's our in-house indicator. I use this a lot more for investing or, you know, longer term swing trades, but we can see. So this is basically the baseline. It's like a smart moving average. It tells you, obviously, when it's orange, you combine this with a high time frame trailer here, which is set to the same time frame as the chart here, which is the 4 hour. You can see what happened here. The trailer turned bullish here, as did the moving average, which is known as the baseline. We got that close above. So from here, it's kept us bullish all the way through. And this was the key indication that we should have started taking a little bit of profit here and ultimately still continuing to hold the position. So this is serving us really well at the moment. It's just one of those really nice snapshots that you can take a look at. We also look for the divergences. This combines, I believe, between 11 and 13 different indicators, you know, RSI, MACD, etc., oscillators, to work out divergences, and then gives you a score and a percentage based on how strong that is. Notice how effective it is in catching corrective moves in existing trends. So while we get these, we're looking for these high volume breakouts to say, okay, correction done, let's resume the trend. Really, really, really good ally, and something that's free for all members as well. It's one of those things that can just really help, especially in your early stages. Daniel J. In December, Bitcoin made an all-time high in alts pump. Now we've slightly surpassed the previous high, but alts are still in the gutter. Yeah, very, very difficult. Kind of, I know the previous alt seasons that we've seen, a lot of it is all about capital flow. Excuse me. And the problem is at the moment, you've got a few different things. The market is massively saturated. In previous cycles, you know, myself and the team pretty much knew most or all of the tokens that were in the space. Any of the kind of real ones, when the low caps were coming out, it's a lot more difficult to get them on exchanges. So you could basically outwork a lot of people. You could out-research a lot of people to find out these early stage investments, agreements, etc., that you had to really give yourself some high probability plays. Previous alt cycles, in truth, you could just pick most alts, just throw a few hundred, a few $1,000s, whatever you wanted at it. And as long as you picked a decent spread, then you were going to end up making a lot of money. It's not like that now. We're very much in the world of a flight to quality, right? So you either need to see some real outliers or some projects that have huge communities that are able to pump some really big backers and stuff like that. If not, it's very difficult picking these outliers at the moment. The capital rotation just hasn't worked as it has done previously. And I think alts are going to probably continue to struggle a little bit, not to mention the fact that, the landscape has changed so much from an investing perspective on that front as well. But yeah, absolutely. I think it's very tricky. I think the really key thing to watch here is, Bitcoin dominance and, ETH BTC. Both of those need to do a lot of work yet, I think, before we see anything from altcoins, unfortunately, my friend. But yeah, but very, very good insight. So deep, yeah, sure. IREN. Oh, stock, yeah, sure. I hate it here. ROM, can you explain what you're defining as a gap, please? Because I must have a different idea. Okay, mate, yeah. It's because it's my fault. I'm really using kind of more of a traditional terminology. So a gap, if you're looking at it in traditional markets, is actually gapping. So like, overnight, over weekend, for example, where you see a stock gap up, you often see it on things like, Microsoft, Apple, Nvidia, stuff like that. So a bit more of a volume imbalance. But this was, for example, this down gap. I just always called them gaps, but really what you're kind of looking at them now is, if you're using things like smart money concepts, would be like a fair value gap. All right. So to me, they're inefficiencies, right? But it's just more a case of what people look at them as. So I'm looking at it as a 3-candle pattern, right? So if this is candle 1, this is candle 2, and this is candle 3, what I'm looking for here, is the high of candle 1's wick and the low of candle 3's. Yeah, and if we've got this gap between it, this inefficiency, this is where orders have failed to pair, and quite often your market makers, bits and pieces, the nature of the market, will draw down to these areas to rebalance them and to make them efficient again. So anytime we come down to these large expansion areas, we're saying, okay, buying was so solid here, people couldn't get on board. Yeah, often you see a return to these areas because late longs are then punished. It would be the opposite for shorts, of course. And then these areas can provide really good opportunities to tell us what the market's next move is. You see a long wick into here, or a decent strong wick reaction, buyers have stepped back in. You see a lot of price action taking place here, and price moving down and then eventually closing below them. I'm seeing that as a sign of weakness. And it's telling me that, price is seeking liquidity lower. In this case, this skinnier gap here, but if we close below that, then I would then look to target that low. So hopefully that sheds a little bit of light on it, mate. So while we're here anyway on Bitcoin, looking for this to still push up, the key caveats in here, just before we do take a look at the news, is, looking at the NASDAQ chart, this thing is just an absolute monster, right? So it's a monster. This is just from intraday trading, but basically you can see by the arrow, the gaps and the equal lows, that we've just been looking to long this. You can't fade these kind of assets when they're like this. Let's see if I've probably got no, I think I did clean this chart up. So one of the things I like to do is using the B Pro, obviously, for this, which gives great confidence. I mean, look at this. On a daily scale, you'd have been back in here. You'd have been back in on the NASDAQ at 19,524, yeah? And at no point has this told you to get out, right? Like I say, one of the really key things, and a good friend of mine, and just a magnificent traditional market trader and huge guy, if you don't follow him already, David over at Fink, Fink, just this amazing guy, lots of traditional market knowledge, and their real thesis as an investment group, and they're exceptional at doing it, is they find assets from some of the biggest economies in the world, mostly the US, that are trending incredibly strongly. They look at capital flows that are going into that. They look at the risk landscape for those projects, and then they're basically buying dips on those things to buy into that strength. The same approach here right, on the NASDAQ that we could have seen. What do we have? We had the close above here, and then price ultimately then reopened here. You know, you'd be up 17.29% on the NASDAQ. That's absolutely mental returns. So that's one of the things that we're using, all right? And again, I favor these type things on the higher time frames. But if not, then I like to use a mixture of traditional moving averages, right? So this is the 20, the 50, excuse me, the red line's the 50, and the 100 here, all right? And then I'll also use the 200 coming in here as well. The other thing that I like to use here, and again, what you're looking for here is for them to be aligned in order, yeah, and then moving as they kind of fan out. ROM, you're very welcome, mate. Thank you for the good question. The other ones that I like to use are the 9, the 20, and the 200, right? This is one of my favorites. And hey, Whack, how you doing, buddy? Actually, Whack, he's just joined the stream here. Good friend of mine and the Nest as well, like as Erica and Jojo, and I hate it here, and some other wonderful people in here as well, Burnside, and so many of you. Was actually Whack actually gave me inspiration to start sharing this a bit more on the streams, right? Showing you these trending plays here. Because look, the 200, yeah, here, yeah. So this is the EMA exponential moving averages. All of these are. As we see this here, look how it's flat, but it's starting to just curve up. This is your kind of baseline. You want to be above the 200 period moving average. Yeah. So see how it's just supported price all the way through here. Then what I'm looking for to get involved is looking at the 9 and the 20 here to hold, seeing them fanned out, so they're just supporting price. By the way, you get this built into BPro as well. I don't use the feature as much as I do. I should be a better exponent of it, but you've got everything from the Bollinger Bands to support and resistance. You get the smart version of these that takes a lot more into account, but a bit old school and a bit old myself, right? So this is kind of what I've used. If I was smarter, I would just use BPro for this, I think. But look, we've got the cross here. Yeah, so this is the golden cross. Then what I'm looking for is, yeah, volume spikes to step into the market, and then we step back on the trend, and then you can start to mitigate. If I'm looking at this from an investment perspective, what am I doing? I'm saying to myself, all right, we close above here, we've got the money, we've got the volume breakout by this point, all right, so I'm entering here, and then what do? If we come and we close below here, yeah, I can take some profit. So I take a little bit of profit off there, that's fine. So say I take 20%, I've got 80% of the position rising. I then take another 20% there. All right. Next 20% comes off over here. Next 20% comes off over here, at which point you start moving your stop loss to entry, right? You're nibbling at this as you're going higher. You're just nibbling, right? And then if you've got the volume, if you've got the breakouts, you can always add when you close back above if you want to, or you just hold this position out. Then once you finish taking profit, as soon as you come back down here, yeah, and as soon as you're closing below this, you just step out of it. You don't get back in until you start to see this trending again, all right? So you're back in here. Here you get the nice high volume breakout after this candle, even if you stepped in at the moment there. Came in here, you're completely flat when price closes below there. So even if you stepped out at that point and you just went out of break even and said, do you know what, I'm going to wait for a different move above it, either that or you're just holding flat at that point, you then close back above here on a high volume candle again, taking a little nibble of profit there, but nothing closed yet. Remember, the white candles haven't closed there. They've gapped down slightly to recover. Yeah, still in here, and then you're still holding this position here. It's a really, really good way to kind of manage trends on these kind of assets. But basically, the long and short of it is, look, I'm showing you this here because look what an absolute beast this is. Yeah, it's a monster. It's setting new all-time highs. It's absolutely gunning. Lots and lots of buys. If we start to see this breakdown, then we kind of sit on our hands a little bit. But at the moment, long and short of this is that the market is looking very, very good for risk. Okay. In terms of the news, I know a lot of you don't enjoy this side of things, right? But Monday 30th today, we've not got any major red folder news hitting the US. On Tuesday, we do have Powell speaking. We also have ISM manufacturing PMI and job openings as well. Through on Wednesday, we don't have any. We do have one key news event actually in the US, which is ADP non-farm employment change. Okay, which is can be really important. Thursday we then go through into average hourly earnings, non-farm employment change again, unemployment rate, and ISM services PMI. All right, so there's some red folder news coming up. Intraday volatility expected on those days, but overall, I don't see any major things that are gonna that stand to derail this. So once again, you just have to be very sharp looking at the news and looking at the fundamental drivers that can step in and affect this. Ultimately, risk markets are bullish. Let's look down here at our little keys that we have. GDVO, gold, DXY, VIX, and oil, right? Although some of these have different drivers, like oil at the moment, DXY. Basically, often I'm monitoring oil all the time, because if that thing starts to spike aggressively, especially if it's weaponized either through the Strait of Hormuz or there's any kind of weaponization of oil, and that means that the mass-producing countries on that front in the Middle East decide to pull back on oil production to squeeze the US. The problem is, if oil starts getting expensive back towards $100 a barrel and above, it's going to make things very, very difficult, because it's really going to kind of drive those recession fears in the US. The VIX, the volatility index, is always of interest here. We want to see that below 20. All right, what we can see here, let me just turn the moving averages off here for a moment. Yeah, what we can see down here is this is our 20 line here. The blue line price is kind of holding below here. Typically, traditional market traders, we're looking for this to be below 20. These spikes above often represent, really, really nasty environments for risk. But overall, you want to see the VIX calm. It's like the fear index, basically. It's looking at how many short or put options, basically, which are like short options. Think of them like that. People taking options to short the S&P 500. When they spike up, often means that, the headwind is then against risk assets. But at the moment, that's pretty benign. We want to ideally see these in the red. Gold, DXY, VIX, oil chilling, really nice. Things like Aussie dollar JPY and New Zealand dollar JPY are there more as a risk proxy. Typically, if you're seeing money flow into risk currencies like the Aussie or New Zealand dollar against safe haven currencies like the yen, then it's showing again that you've got, the recipe here for risk assets. And we can see these are kind of stuttering along, but ultimately the trend is sort of still up, if not just a little bit flat. Okay. And then we're looking at the bond markets. All right. US 2s and 10s being the key focus here as well. Ultimately, the US want to really drive down the treasuries at the moment, because they're going to have to refinance this debt building through into 2026, the huge financial deficit. They want the yields to be lower because they're going to have to do treasury buybacks. And then the last part here is our Magnificent Seven: Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. This helps me gauge, because they're such major parts of the S&P 500 and the NASDAQ, helps me gauge, if they're really supporting those indexes. Obviously, there's a lot of other important tickers in there as well. So we've got about 12 minutes left to go. We're going to spend about 5 minutes ripping through the rest of these charts, and then I want to introduce you guys to EstateX. Like I said, my absolute favorite project. Somebody a few weeks ago asked me this, and then I've had a few more DMs about it since. So I promised that I would do it, as well as to some members, my ultimate #1 high conviction investment project. So I want to run you through that very quickly. So let's take a look at ETH, shall we? We'll do it on our regular super messy chart. Unfortunately, apologies for all the mess, but basically the reason is we're keeping all of this on here. This was the 50% of the range, the Fibonacci, right, that we were looking for here. Yeah, see that? That's the reason we left that blue line on there. That's what we were longing from here. So that's at target now. It was there, and now we're basically looking here. And if we look at this, we'll see this on a lower time frame as well, but this gap extrapolates across to here. Yeah, we have just closed above this gap here, inverting this. So this is something now that we want to look at and say, okay, let's just tidy that up a little bit here. That's now become a gap inversion, right? Remembering on a daily scale, we now want to see this offer support to price with it moving higher. So I think that looks quite nice there. We're just going to move this onto a lower time frame. For those of you that maybe don't know, by the way, that yellow orange box there represents the golden pocket for this Fibonacci trace down. All right, so if we manage to get above here, this is the next point I'm looking at, a potential resistance. Overlays with these gaps and this balanced price range here as well. So looking for price to draw up here, but again, a little bit of overhead resistance at the moment, not to mention the fact that if we just look across the line here and we say to ourselves, all right, that's not really bad, is it? If you're looking at for a support and resistance level, look at all the absorption, all the wicks coming down, deviation, price closes above, impulse move higher. See how price, we're talking about that hot water test again, how it just starts to stick. See how it enters the level, great downside wick, trade it higher. Great downside wicks, trade it higher. Close below, caution, targeting this low. Yeah, failed short, price gets back above, start to see the absorption, long it again. That was a really nice candle. Would look to have traded that higher, would have been wrong. Then we see the wick candles come from the upside. And then again, look, water's tepid now, price is sticking to it. Then we have that move below. So this is a key area, in my opinion, that we need to get back above. So I want to see price coming back above here again, ideally with some high volume. Oh, we can't use the volume on this, unfortunately. So high volume breakout above here. Wasn't really that at the moment, and we failed to get above this high. But as long as we hold this area and we start to build upon it, I think this could be good for ETH moving higher. On the 4 hour, which is where all this mess came from, I'm going to start deleting some of this now, guys. Remember our rule. I only ever delete the stuff on the charts when we're on the live show together, right? Because it allows us accountability. Yeah, this was a similar situation down here. We were looking for the midpoint of this expansion move higher. If we weren't going to hold this, yeah, so this area of demand plus this gap, we didn't even come down for either, right? This, in fact, still left intact with a lot of liquidity resting below here. So I believe, let's have a look. We were probably looking at this actually on an hourly. Yeah, which would be one of our more aggressive plays. We were looking for price to come and close above this area here. We never got that, right? So again, as long as we're suppressed below this area, and then we did get the close above here, but ultimately price had already pretty much run to target. So we're going to get rid of those now. So just to make sure that you're plugged in with what the thought process was on that. And we're looking for the breaker as well. So let's just go back to the 4 hour quickly. We only really drop down onto the hourly and lower. If we've got a real reason to, if we don't see anything clear and obvious on the daily and the 4 hour. So this has got the perfect set of conditions for me now. All right. So we're looking for this area to hold as support. I'm just going to get rid of this for a moment. Yeah, just so it's a bit clearer. So if we're in an area of support on the higher time frame, what am I looking for? I'm looking for a bullish gap. Yeah. In order to be able to step in. And here I've got a bullish gap, right? Beautiful big bullish gap here. So my conditions are this. The initial reaction's okay, but now it's really starting to drive in. Really want to see this, and the candle's about to close in a moment. I want to see this more downside wick, yeah, than upside wick. Really like to see this get recovered even more, so it's more of a bullish pin bar. Then I'd have more thoughts that this is the expansion. Price has stepped into here, and we're now looking to trade this higher. If we close below here, I think we have so much resting liquidity down here. Yeah, all of these kind of equal lows, or relatively equal lows, I call them just equal, is basically looking for either trend line liquidity or flat highs, flat lows, but look, liquidity there, and liquidity here. Price closes below this here, I think we make an aggressive run on these lows. Okay, so conditions for today and for the week. Close below here, looking for shorts, hold this area, and as long as we see absorption down here, then looking to trade this higher. What else was there as well? A few people asked for deep. Let's take a look at this one now. What have we got? Deep USDT on Bybit. Okay, really interesting. Oh, we've obviously taken a little look at this before. I think I remember you asking about this before, Grandmaster Pikachu. Let's have a look. Yeah, so quite simply, we can see immediately from this, what do we do? Yeah, there's the down close candle. We want to see price close above this on a weekly scale, retest it, move higher. What did we get? None of that. Look at the upside wicks. Kind of doji candles for sure, but they're kind of stuck up there, right? And then, again, look, for me, I want to see stronger reactions than this. I don't want to see price just hanging around in these gaps. Long upside wick. Price is just kind of grinding down. I think on a weekly scale, you know, I'm not enamored with that price action in truth, but this area is holding quite well, which is definitely of interest because this is a balanced range, right? So you've got basically a bearish gap, close through with a bullish gap. So, you know, ultimately that should have been strong resistance. This should be strong support. That's been inverted. So that should offer support. Close below this here, and I think we're chasing out these lows, right, on a weekly scale. So as we look up here, Sui's liquidity. Okay, very interesting. So as we look up here, yeah, what do we have? This was the TA from before. Close above here, looking for this gap to hold, driving price higher, but remembering, obviously, we need to see weekly closes above here. We got the initial expansion, took out these highs. Again, remember what we do when we come into contact with highs or lows. We want to see how price is reacting above it. Allows us to be reactive, all right? So equal highs up here, what happens? Long upside wick. Price is now grinding back down to this level. Yeah, we closed below it here, which I would have assumed meant we were coming down for these lows. We didn't. Price actually recovered, purged liquidity again before actually breaking down, all right? Nice little liquidity games there for everyone. So we can get rid of this now, keep the chart nice and clean. All right. Now, what happened was we got caught out on that side of it. I wasn't obviously openly trading this, but if I had been, I would have been caught out on it because I would have expected price to come down for that low. It didn't, reversed up, took this high, but then look at the large rejection candle that we get up here. All right, price on high volume, smashing into this big rejection candle, bearish gap. Conditions are hold below this, trade it lower, close above it, and we're moving back to highs. All right. So on a daily scale here as well, it's not the cleanest thing in the world. We have kind of closed above this here. It's a large kind of area of demand. I don't mind this so much. Not as good as this one here because it took liquidity, but still. Let's have a look. So on the daily scale, this is the order block here. So we want to see how price is engaging with this. Look at the falling buying volume here. Look how they just kind of spike here from the sellers, and then the buyers are trying to get this up here, but it's just not really finding the conviction. I think we'll probably find a little bit more on the 4 hour. I'm just going to hide this for a minute so it's not too much in the way. I'm much more interested in this area here because the rest of that gap has been rebalanced. 4 hours not massively clean either, right? I think I would focus more on the Fibonacci's for this. Right, later, all right. Yeah, so looking at price coming back down to this consolidation here, or maybe this gap inversion here, because this gap inversion has done a great job of supporting price so far. So we want to see if that continues. It also, draws out perfectly across the golden pocket here, just below the 0.5. So this is my target at the moment. Looks like it wants to correct here. I would maybe look at this low as well and just kind of say, okay, if we get a really strong reaction to this, if price drives back down, we see a long downside wick recover back above it, I'd consider taking longs from here based on the daily order block. But on a 4 hour scale, I think this could easily come back down here towards the golden pocket, right? And then IREN, wasn't it? IREN Limited. Let's have a look. Obviously, we're doing this on the slightly higher time frames here, right? Traditional market asset, what we've got pre-market. 475. Okay, interesting. Well, if we look at this here, this is really classically just grinding up, large expansions, decent, very, very close to a golden pocket or a 786 retrace here. What have we got? 79. Yeah, so decent hold here. Price kind of started to fall away over here, right? So we see that coming in, but actually there wasn't, while price is kind of coming down here, look how the volume was decreasing. So sellers were trying, but they were getting exhausted here. And then look at these large, green candles here showing the buying coming up. I actually quite like this here. We're seeing a lot of strength come into it. Obviously, we do see a lot more gapping on these. These things are typically being done on the higher time frames. Either that or, you can change the instrument. But at the moment, this is looking really good. I think looks strong, holding high, good levels of volume. In terms of just looking across this, I haven't really got kind of like a key support resistance area, but we do have this. I really like the volume of this candle. I'd want to see the daily candle close above here, right? And then at worst, this to hold if it came back down. Yeah, in here, look for that to hold to pump it high. If we close below this here, I think we could come back to this kind of consolidation area here, which is kind of, if we just look left across here, kind of a, a little bit messy, but kind of a support resistance area here as well. See resistance here when price broke down, retested, sold off, found initial rejection here, strength on rising volume to get us back above this. And then again, waning selling volume here and the buyers really stepping in. And we see how this area was resistance back here, support back here as well. So that's what I would look for there on that IREN, my friend. Close above here, hold that high volume, then look for this area to hold as support and push up further. Or if it holds, I don't mind dips back down into this area, but I wouldn't want to see closes below this. I think then we could come back down to retest this support. Right, legends. So I've left us a couple of minutes towards the end of the show because I am really, really, really excited. Oh, sorry, Mill Guy, I missed this. Any chance have a look on TRX, please? And you are so nicey as well. Thank you, my friend. Let's have a look. Let's just take a look at the Binance contract, shall we, for good old Trom? Let's just start with the daily here quickly, and then we're going to rip through into our good friends Estate X. Right, so, well, this looks quite nice here, actually, I think. What I would say, there's clearly a lot of absorption coming in along here. So this is definitely a key area that I would watch. Every time price comes into this, we're having a good reaction so far. So we want to now see that catalyze and then start driving price higher. Great thing about these long downside weeks is I don't really see much in the way of price here if it really does decide to hold, because it's not quite trending, but because we don't have the gaps and that to go from. We've had this lovely reaction here. One thing that worries me a little bit is the declining volume. Okay, we can see that quite clearly here. We've got volume decrease. Yeah. So aggressive spike there from the sellers. Now volume starting to come back. But that's not too bad. Can just, again, we traded this over the weekend, right? Volume is going to die down a lot. So line in the sand time, what would I be looking for? So this and this kind of area to hold here, right? OB and this as well. I'd kind of take retest of either of those areas, right? We've had, this was at least a reasonable, yeah, the volume kind of died off a little bit as it's come in. Really key to hold this area here, in my opinion, for Tron. Let's just take a look at the 4 hours, see if he's given us any gaps or anything more to kind of go on. No, not much really. A little bit of a mixed bag from the volume perspective as well. We can obviously see, yeah, B-Pro's kept us bullish on this one again since back down here in the lows. While the baseline warns you here to just take some profit, you wait for those volume breakouts, which we got here back above, and then you can kind of start to re-add back in. That looks quite nice at the moment. In terms of our moving averages, the same. And actually, this looks really nice here on the MAs, right? Because we've got them, or almost, we just want to see the 50 cross back above the longer term moving average here. Look how they're starting to fan out, right? When you look for moving averages and stuff like that, yeah, obviously you can be late to the crosses sometimes. What I'm really looking for is to see them all really fanning out yet, to see the space developing between them. And that's when you often see these really good runs. If they're quite close or a little bit choppy here, then, basically is what it says on the tin, right? So in terms of this, I'm going to stick with the daily here, I think. As long as this continues to grind up, it's okay. If you're a shorter time frame or a lower time frame trader, I would apply the same kind of principles here to the 4 hour, right? Looking for the bearish candles here to continue to support price higher. And at the moment, on a 4 hour scale, this isn't the worst reaction, right? It's a very small, skinny order block, I know, which we discussed, or area of demand. But long downside wick there. Look at the nice volume that we got here on the breakout. And then a nice tail wick coming down into here showing further absorption. So on an intraday basis, I wouldn't be scared to start looking at some long trades up to 0.2797. Obviously, the caveat being if we get the entries and this area has to hold. If it starts to break down, we come back below this, we can easily flush out some of these lows as we look to retest the daily level. All right. Hopefully that's been helpful, Mill Guy. Right. Okay. Boom. Really, really excited to bring you guys this, right? I don't really do this side of things, but I think I'm just so into these guys. The token launches come up. Everything's gone amazingly. They've had recent reviews, Apple News, Forbes, USA Today, Digital Journal, Crypto Weekly, Yahoo Finance. Everybody's all over these guys. They've got partnered with Microsoft, Swiss Money, Cashlink, diverse, major players. Not just in this market, but in traditional finance as well. I think Forbes called these guys, the future of property development. So first of all, what is it? Let me bring you up the chart first of all. All right. So this is what I'm watching here on a status. Mill Guy, you're very welcome, my friend. Thank you for the great suggestion. Okay, first of all, who are Estate X and why am I excited about them? Like I say, I like to be able to bring an area of specialty or knowledge, especially to anything I invest in. Not being as wonderfully technologically minded as a lot of people out there, I look to what I have experience in, and that's property development, that's marketing. They're the two biggest companies that I ever built, right? What I'm looking for here is the tokenization of this space. The real world asset space really excites me because I think there's so much room to grow, but I also think lots of people in the space doing it very, very poorly. And then I came across these guys and, Bart, Steve, the team over there just absolutely blew me away, not just with their vision, their execution, the partnerships they made. They're incredibly hardworking. They understand the space so well. And look, the hairs are standing up on my arms just even talking about it. So who are they? They're a layer one RWA blockchain, all right? So the whole point of this is they're opening up, they're an investment platform, right? And they're literally revolutionizing the property market, right? And the property industry. It's a $300 trillion marketplace, all right? And what do? They allow you to access property investments all across the world that can return you money in passive income. Why is that important? Because not everybody has 2-3 million to go and invest in property in Dubai or Singapore, or even less, but even in emerging markets, places like that, you have to be really, really careful with that. There's so much stuff that you have to navigate, and this for a long time has been a very closed industry. It's made for big money players, and what's the problem with that is it's ripe for disruption. What we learn with technology, with the use of blockchain, is it makes everything that much more efficient and effective, and these guys are the driving force behind that for property, right? So they've got an absolutely comprehensive suite of Web3 RWA solutions, right? So simplifying real estate investing, lending, ownership as well, if you want to get into that space. It solves liquidity issues in the market. It's just mad. It's a huge, huge, huge win-win. So, like I said, they've just launched a token. I've invested in it heavily. I'm going to continue to invest in this from a technical perspective. Before I share a little bit more information with you before we close up, this is where I am on the chart, right? Funny enough, I was speaking to Steve, just one of the top guys over there, recently, just talking about this cup and handle pattern. I was like, whoa, Stevie boy, you can leave the analysis to me. And he absolutely banged it out of the park. Beautiful traditional market cup and handle pattern, huge breakout off the back of this. Now, key areas that I'm looking to add, I'm not going to sell any of this. And if I'm wrong, but I don't think I'm going to be on this one. This for me is a massive time horizon. I think these guys have got almost a first mover advantage in the way that they've conceptualized this. And it just really excites me, right? So long-term bags, they're going to be my biggest holdings as well. This gap here, I really like. Yeah, for adding, we've seen this large expansion. What do we get? Nice big volume. I mean, look at the volume coming in here as well, right? Buyers are interested in this because, if I'm looking at this and I'm saying, okay, what happens if the whole crypto industry just melts away in the next few months or whatever? I don't care. It just allows me to accumulate more of these kind of good companies. And these guys are the number one on my list. So this gap here is a key area of interest from a technical perspective. Also retests of this area. We saw the absorption, typical token launch, it gets sold off by weak hands. What does that allow to do? It allows stronger hands, more well-educated people to accumulate this at lower levels. And my God, did people step in here? So this for me is great because look, the absorption here, people again getting a bit tentative, taking some profit. I don't blame that. As a trader, I'm very, very much for taking profit. But for me, with this isn't a profit-taking thing. This isn't a trade for me. This is very much an investment focused on the future, okay? But not just the future. I'm talking about the real immediate term as well. These guys are making huge waves. So this area for me, we hold that. God, if we ever got back down to these levels, I can't express to you how excited I would be long-term to kind of get back in. I don't think we do. I think we're going to hold this. Probably, best case is we get some more buys down here, but I'm probably going to get some more when we come back down, if we come back down in this gap as well. Of course, it can come under pressure like anything can in the crypto industry, but I'm looking at this as just, if I see dips or if I see major news that's bringing the market down, one of the first charts I'm opening is this. And I'm saying, okay, what level can I get in at now? What can I add to? And of course, I'm bringing my average price up with that, but I really don't mind because when this thing goes parabolic, it's going to be a lot more expensive to get in higher up, all right? So let me just share this with you guys as well. Where are we? So you can find absolutely everything out you want about these guys as well. You can find them obviously out on on Twitter, on social media. They're super, super active. And let me just share this with you guys very quickly as well. So this is the website. You can get on here, estatex.eu. All right. These are just some of the partners. I mean, when you're seeing people like Microsoft and that fly around on here, right? Swiss money. There's some major players involved in this. All right. Look, in terms of who's covering this at the moment, the Digital Channel, USA Today, Apple News, Yahoo Finance, Forbes, Crypto Weekly, right? You can get through here onto the website. Brilliant, very concise and powerful video that you come in, just gives you an overview of what it does. Do come along and join the communities. They're always doing banging giveaways as well. So if that's your thing, then do that. You can discover more about them here. But one of the things that I really wanted to kind of cover with you guys is this. So tge.estatex.eu. Okay, if you don't manage to grab that link or whatever, what I'll do is I will just share it here for you in the chat. But if not, you can always reach out, guys. Just let me know, and I'll put you in touch, right? Like I said, I'm not getting anything for this, right? That's what you need to understand about me and my shows. Nobody's paying me to do this, okay? Just so that you're aware. This is just purely from my side of things to you, okay? And I really want to help these guys out. Not that they need it, but they're just such a good crew. And I think this is going to really, really change people's lives moving forward, especially if you're looking at hedging capabilities, things like property and stuff like that, right? Not to mention the portfolios you're around in. You can just go in here, really simple. Are you outside of the USA? I am. So I'm rest of the world. I go on to here. Where can we buy it? Uniswap, Radium, ATX, Mexi, Kraken, right? That's just it at the moment. There are some more really exciting announcements coming up as well, but I am going to leave that for you guys to investigate. And it goes so much more beyond that with what they do, right? It's just they've lowered the investment barrier by like literally a million miles, right? You know, I think from about 300 euros, unless I'm mistaken, you can grab a piece of property and you can just keep adding. It's such a clever way to diversify that portfolio, but to stay within a realm that you understand. You know, really intimately, that being crypto. All right. Yeah, I just love it. They got their whole ecosystem over there. Look, I could sit here and I could talk to you about these guys all day, right? But what I really recommend is just getting yourself on there. I'm going to share the website link as well, so you can take a look. And I would love for you guys to reach out to me and just tell me what you think. Engage with the team. They're absolutely amazing. They're always out on the road. They're meeting absolutely everyone that's going. So do let me know. Like I say, this is the project I'm most excited about. And I'm really, really happy. I'm really buzzed. You can probably hear it in my voice. Like I say, there's no paid promotions or shills here. These guys are the real deal. And, you know, from me to you, a lot of people asked it recently. I've had a lot of DMs about it. I got asked within the community, what's my major conviction play? It's this. So please do look into it. Really keen to hear your thoughts, and make sure to go and check the guys out. Right? There's so many incredible things that they're bringing in. Forbes magazine, look at this. EstateX has the potential to create opportunities for previously marginalized communities by giving them access to wealth building tools they have been historically restricted from. This is what I'm all about. This is opening up. This is cracking the status quo. This is taking away the money from the old boys network, you know, the private school crews, the people that have that ability to tag into it. This is bringing it to the people that want to work hard, people that want to use their minds, and people that want to better their lives, all right? So take a look. Let me know what you think. It's been fantastic having you all here with me today. About 2,600 people live at the moment of speaking. I know a lot more of you are going to watch this on catch up as well. So please do reach out to me if you've got any questions. Go and check the guys out, engage with the team, and wishing you all a fantastic week ahead. Do trade safely. For those of you over with us at the Nest, I'll see you there today, as well as on our live trading show, which will start tomorrow afternoon at 12:15 UTC. And I'll see the rest of you live on Wednesday for our alt request show. So if you do have some alts that you would like me to look at, or some traditional market instruments as well, let me know and we'll get straight on there. Take care, guys, and have a fantastic day.